welcome back guys to the Stock Estate, alright? I'm your host here, the Stock Estate, and today let's talk about last week's picks, right? Which we got some gains on our options play, and our stock plays, is coming a little bit stagnant. Okay, so we might exit off that position to go into more higher potential plays for this coming week. So I'm going to give you the top play for this coming week without further ado. And if you do like this video at the end, please drop a subscribe and like. Alright, let's get on with the video. Okay, so let's bring me to a small size. Alright, so this last week was XLNX. That was the last week's place, and this company, right, we did two things, right? First, we sold an option call, all right, a put contract at 193, a weekly contract, which expired worthless and got us a few $100. Okay, that's just an extra hedge for the entire trade of the stock itself. And next, all right, we entered, right? We wanted to enter, all right, if it dropped below this area, right? If you did not watch my previous video, please go back there and refresh my thesis on that. So again, we wanted it to have a very weak pullback around here, but it didn't, right? So it moved at a very, very small volatile state, all right? So I didn't enter on this trade at all. I just did an option play on this, and I just got a couple $100 off this company itself. And yeah, so this was the trade for last week, okay? And it's looking a little bit weak right now, hitting a certain resistance, right? Looking at a longer time frame kind of thing, it might be a sign of a trend reversal, right? Reversing back to the median, maybe near to the 100 moving average. As you can see that this is clearly, it has gone on a huge run, and maybe it needs to take some breather before heading higher. XLNX is a good company, but definitely it's time for a breather before it goes to more of the further upside. And now we'll be looking to enter, okay, if it retraces back to the 100 moving average where it belongs. All right, so potential company for this coming week is BBW, right? BBW, right? Let's give you a quick breakdown of what this company is. Okay, so basically this company is a toy company. And normally, I'm very skeptical, all right, of investing in companies like this because there's always fleeting consumer trends and tastes, especially among younger consumers. So for this kind of companies, I'll most likely be trading it weekly, getting myself in and out of these companies, all right, because this company is currently trading at an all-time high. So normally I'm a little bit more skeptical, but again, there is some potential for the upside, all right, because of some of these fundamentals. Okay, price to earnings 11 is quite undemanding. Forward P of 8, quite cheap, all right, in comparison to all its peers. I've done the research. You can go and do more DD on that yourself, all right. And recently it announced buyback, all right, which is a huge catalyst, all right, by squeezing the float itself and squeezing the price upwards. And it is also doing many things, all right, many bullish things talk about this company. So I would say the sentiment on this company is more of a bullish one, all right. It partners with Nuantix, which is a very publicly listed company as well, which does build a bear and bring it to life. And it is developing content intellectual property, all right, which I'm not sure how it will pay off, but again, at least the management is doing something to give this company credit, all right, to grow its revenues year over year. And one of the main risks, all right, we have to be careful about is if there's any news about shutdowns to the economy and mall-based traffic, all this kind of retail sector securities and stocks will get hit the most. Okay, so let's look at the charts itself, the most important part. The charts itself shows many things, right? You want to look at the, if you look at a very big time frame itself, right? Actually, this is at an all-time high for many years. Okay, as you can see over here, all right, if you go to the huge time frame, a 1 month time frame, right, you can see that, okay, this is actually one of the all-time highs already, right? And huge resistance at around the $23 mark, I would say, there's a huge resistance at that area because it is playing at that range, right? So I would need to see some more consolidation before it breaks to the further upside. That's why it's very important to reference to the longer-term time frame. So longer-term time frame, you can see the immediate, I would say, resistance, right? It's around $21.77, $22. So I always want to sell before the whole number, right? Which is around $21.90. That will be a good area for me to sell, but for me to take a huge advantage of the short-term fluctuation. So let's go back to the daily time frame where the swing traders belong. Us, the swing traders, we belong. All right, so this area, right, definitely I want to enter on Monday open if it maintains this strength over here, because I like this, contraction of volatility, and as well as a huge push to the upside, which shows that there's a lot of people who are buying at these levels itself, and I can easily swing it to maybe, let's say here. So let me just bring it up here. All right, if it dips a little bit, I'll enter. All right, and my profit target would definitely be around $21.90 each, or 90 cents each. Stop All right, the stop will be just right below here. All right, it's a 1-to-1 risk to reward ratio. It's not, I won't say it's a very big profit zone. All right, but again, it's a more of a high probability trade for me. And second thing I would do definitely, it will be to sell, okay, a put, okay, maybe right here. Okay, around here. Sell I put a weekly put, maybe around a $15 strike price, all right, gain some extra premium, so that, you know, if I get stopped out of this trade itself, all right, you know, there is more money to cover those stop losses, so you will feel more safer, because the odds of it really, the only way you lose a lot of money in a sense is where it really crashes down, huge boom to the downside, right, and takes out every single thing, right, your stop loss and your defined put. So that is you know, the double layered protection that I have, right, so that we will not, in a sense, lose money over the weekly short term, because the chance of it dropping to the further upside, downward move, without earnings call, without any huge news, all right, it's very highly unlikely to bend to the downside below 15. So yeah, that's the strategy that I'm, you know, combining. Okay, for the more advanced people who likes to combine a bit of options play with just pure stock. But if you're just a complete beginner, or you're just following the channel for the first time, definitely just do and hone the skills on the stock trading itself only. All right, and as you get better and better and you get more management skills, then you can manage multiple positions, then I would suggest you to, you know, venture into different options plays, to combine it, all right, so that you can form your own trading strategy. And with that said, all right, yeah, thank you for watching to this video, and I shall see you again in the next video, everyone. All right, happy new year, and I shall see you again soon. Ciao, stock is out.